So in this video, we're going to watch Dan Ives completely dismantle all the bear case arguments against Tesla. And then at the end of the video, I'm going to give my personal comments as well as showing you why $270 per share is the bottom for Tesla in my personal opinion. Let's watch the clip first, and then let's go through it afterwards.
Dan Ives is with us, Managing Director, Equity Research at Wedbush Securities. Dan, thank you for being with us. I mean, we got these delivery numbers from Tesla, and when you look at them sequentially, a little disappointing, but still year over year, you're seeing the growth. What did you make of it?
Yeah, I mean, Nicole, I just view it year over year. It was strong, especially relative to this environment. The price cuts are working, specifically in China. And if you look at the factory downtimes, this sets up what I believe is going to be a very strong Q4. And I think that's why the street shrugged off these numbers, which clearly were disappointing.
You know, when we talk about, people start comparing other makers like Rivian, for example, to Tesla because they get excited and they're seeing Rivian on the road now. But, you know, Rivian delivery 15,000 plus to Tesla's 435,000 plus. Rivian's probably going to come out with 52,000 vehicles this year versus 1.8 million for Tesla. I mean, is Tesla still, I mean, I know BYD is on its heels too. Where does Tesla stand? I mean, to the people who are the naysayers for Tesla, what do you tell them?
I mean, the scale and the scope is unmatched globally. I think when you look where Tesla is, I think, look, one of the biggest risks, if you look at the thesis, was GM, Ford, Detroit. That was going to be competition in the U.S., but now this UAW debacle, that's actually been a win for Tesla. I think when you look in China, price cuts, that price war has happened, BYD, NIO, and others, but Tesla's actually gained share. And I continue to think going 2024, they're in a massive position of strength despite a shaky macro.
And when people say that Tesla trades more like a tech company versus an auto company to try and justify the valuation, I mean, you have a 350 target. It's at 247 today. Tell me why the valuation is justified.
Well, I mean, Nicole, you've talked about this a lot. I mean, we view it as a disruptive technology player, not an auto company. I think if you look even at the sum of the parts that's now starting to play out, supercharger, battery, ultimately FSD, AI, what separates Tesla from others, it's really the software and what I view as the secret sauce, which is non-hardware. And that's why more and more, I think investors are starting to understand this is not an auto company, it's disruptive tech. And I believe it deserves that multiple that I think it continues to attain going 2024.
Right. I mean, that's the whole point. And that's why, you know, I ask you these questions because I get bombarded sometimes like, oh, full self-driving is so far away. Batteries, they don't really make batteries. They do it in collaboration with other companies. They're not really a battery company. They're not an AI company. It's just an auto company, and it's not worth the current price. You know, do we have actual statistics of any sort of how many batteries are made, that they really are growing in AI, that there really is potential?
I mean, look, I've spent a lot of time at Tesla factories around the world, as well as other factories. And that's why I think it's very easy to be bearish on Tesla sitting there in your spreadsheet in New York City. I think when you see what they're actually doing, that's what separates them. And I think again, that's continued to be a differentiator.
Yeah. I mean, the Cybertruck is coming. That should be an exciting addition too, right? When you talk about the orders that line up for that, right?
Yeah, look, we believe production begins later this year, deliveries into next year. And that's just going to be another, I think when you look at their product portfolio, that's just going to add to the growth. It's going to add to the moat that I think continues to play out over the coming years. Look, obviously we're going through a white knuckle period in terms of multiples, in terms of disruptive tech. I think we go into next year, I view it that this is kind of the next phase of the Tesla growth story.
Yeah, and I know, Tesla is not unionized like Ford and GM and Stellantis. They get basically shares and such, right? I mean, they get shares of the company, and that's sort of the carrot that Elon Musk puts out there to make sure that they don't unionize. What do you think of that?
I mean, look, the debacle that's happened in Detroit with the UAW, that's really been a torpedo for the Detroit Big Three in terms of you know, what I viewed is it's going to be a pivotal year in terms of 2024. Tesla's never going to have unions. And I think that continues to really be one of their strengths in terms of how they built it, how Rivian's built it. And I think the sad thing right now is that the winners in terms of what's happened is UAW cage match with the Detroit Big Three. It's Tesla and it's the foreign automakers that are going to benefit.
So a few things here worth mentioning. First of all, let's cover about the main topics that Dan brought up, and then I'll show you what I think is the bottom for the stock and what is the top, assuming some very either bearish or conservative assumptions, and it's going to blow a lot of haters' mind. So first of all, I have to be honest, this was probably one of the least anti-Tesla biased interviews I've seen in a long, long time. So kudos to the interviewer. Not bad, not bad. Obviously, she had a few mishaps, but overall, she was kind of balanced, and I gotta give credit for that. I mean, that doesn't happen every day with Tesla media. Now, obviously, Dan again educates everybody on the fact that there's shutdowns, planned shutdowns because of the phase out of the current Model 3 and the move to the Highland, which are exactly what Tesla communicated is going to happen, and yet some investors and traders misunderstood that. He is talking about a setup for a massive Q4, which if Tesla is going to hit 1.8 million vehicles, as they say they will, they're going to have a great Q4, which is just, logic on Dan's behalf. I absolutely agree. The interview did mention that if you compare Tesla to Rivian, you see the huge differences in the life cycle, right? Rivian is at the beginning stage with 50,000 vehicles per year. Tesla is already at almost 1.8 million vehicles per year. So the differences are massive. And I don't think it's even the biggest difference between Rivian and Tesla. The fact of the matter is that Tesla is a much bigger potential company as far as AI, as far as robotics, as far as energy tech. And Rivian is a great car company in the making. So, he did mention that the Ford and GM thesis as being viable competition for Tesla is now officially dead. I think it's been dead for a long time, but he's saying, look, the UAW strike has put the final nail in the coffin of that argument that Ford and GM will compete with Tesla. They're going to fight for scraps. BYD is nice, but Tesla is still winning despite not even competing with BYD on their favorite market segment, which is the $25,000 car. 100%, I agree with him. He says that Tesla is a disruptive tech company and should be valued as such. Couldn't agree more. Unlike Rivian, that should be priced like a great car company in the making, but they don't have the upside. The level of ceiling that Tesla has is way higher than Rivian. So there's not a lot of companies that justify a valuation like Tesla because of all the potential S curves. They still haven't even hit it all. He talks about his price target being 350 and currently the stock is at 250. I'm going to show you why 270 is the bottom for the stock long term. It might drop a little bit here and there, but sustainably, it's not going to go below 270 for a long, long time and stay there. I mean, it might hit it. I'm not saying it's never going to happen, but as a long-term analysis, we're currently at the bottom of Tesla before the new cycle starts. She did mention the fact that she's unsure of Tesla being an AI company. I mean, lady, have you seen FSD or the Tesla bot? I mean, Tesla is an AI company. Dan said a beautiful sentence, which I might put on a t-shirt, is the fact that it's easy to be bearish on Tesla on your Excel spreadsheet in your air-conditioned office. And I couldn't agree more. People who have no idea about what Tesla is doing are running Excel spreadsheets and now becoming bears without understanding the massive potential of this company. They both actually mentioned the Cybertruck as being a massive catalyst for Tesla. Couldn't agree more. And I think one of the more important overlooked aspects of Tesla is like why Tesla isn't unionized, why the employees are getting paid less salaries, right? And work harder and make better products and don't unionize is because Tesla has made a lot of people millionaires. There isn't a single company in the world that made more employees millionaires than Tesla. Tesla have made simple everyday workers millionaires by giving them stock-based compensation, options, and a piece of the pie. No other company has done this. And this is why, number one, people give a fuck about their work, the quality of what they do, and also why Tesla will never face a union UAW problem like Ford and GM, because their employees are partners in their journey. And that's absolutely 100% on point. Now, I do want to share with you my own kind of example of why 270 is the bottom. On the screen right now, what you're seeing is Stock MVP, which is a platform that I've created along with my partner Pete, stock-mvp.com. This is a all-around analysis tool that looks at companies from every possible angle, as far as the insider selling, institutional buying and selling. You can run a whole DCF on this. You can look at the reportings, at the financials. We have this thing called MVP cards, in which you can have a snapshot of how the company is doing. So you can get it right now at 40% off for the next 2 weeks, and then the code goes away and it's full price again. You can use the code. It's going to be in the below description, last 40, and in the pinned comment. 2 weeks, it's gone. It's going to be back to full price forever. So get it, try it out. 7 weeks, money back guaranteed. Now, the reason I'm showing you this thing, beyond, obviously, I want to promote it. Of course, I want people to use this. I've built this. But the reason I'm showing you this, and I'm going to make it a little bit bigger here, because I want you to see the assumptions I've used to show you that 270 is the bottom for the stock, and 1400 is the more optimistic version, using some very conservative assumptions. This isn't like even Tesla going crazy story. This is like Tesla being normal and Tesla screwing things up. So if Tesla screws up completely, they're a $270 stock in 5 years. So that's the worst possible case. If Tesla keeps, growth at only 25%, which is half of what's currently it's growing, right? If the net income margin drops from 12 to 8%, if the free cash flow margin drops to 6%, the PE drops to 50, the discount rate is 12%, which means very high interest rates in the market for the next 5 years, then Tesla is a $270 stock in 5 years. So if the world falls apart pretty much and Tesla screws every single thing up, they're at $270. That's the bottom, right? But if you use just normal assumptions on the conservative side, which is only 50% growth, which is what they have right now, a 12% net income margin, which is what they have right now, an 8% free cash flow margin, an 80 PE, which is what they have right now, and a discount rate of 10%, assuming interest rates will go down a little bit over the next 5 years, then all of a sudden, that's a $1,400 stock, which is an upside of 434%. So at the end of this analysis, what seems to me to be the case, beyond what Dan said, which is on point, is that people who buy Tesla right now, in my opinion, and this is not financial advice, in my own personal opinion, they're getting Tesla at the very bottom in which you can own the stock. And the upside is so lucrative, it's almost like a no-brainer for me. That's why I have a lot of my position in the stock. But hey, you do you, I do me. If you want to go deeper into this and learn a little bit more about how to evaluate companies like Tesla, I've said it before, I'm going to say it again. Feel free. We have one final spot left. I just checked before this video. One final spot left for our Academy. And then it's closed for a while because the demand is way too much. It's a personal group, so I'd like to close it. So one final spot. Whoever gets it after this video gets it, and that's it. There's not going to be any more spots. Thank you for staying with me. I would love to see you in our group, on our Discord server, or on our Patreon. The link is going to be below, patreon.com/Tom Nash, either on the Academy or on the regular membership. Would love to see you there. Thank you so much. I'll see you in the next video.